I stopped using the 1-minute chart and found out the 5-minute time frame actually works best for day trading, especially on high volume momentum strategies. In this video, I'll show you how I made around $2,000 trading stocks using the 5-minute and 2-minute time frames. Okay, now let's get started with our trading video lesson, the ultimate 5-minute time frame trading guide. Just like most traders, I used to think that I need to be a super sharp price action scalper and react quickly to every single breakout or breakdown on the 1-minute chart. But the truth is, these long upper and bottom candlestick wicks or chart patterns are actually one of the most common reasons causing you FOMO or revenge trading. And sure, I'm sure you've seen a lot of pro traders who use the 1-minute time frame and they use it for bar by bar price action analysis. However, there are some crucial factors that you must know before using the 1-minute time frame to make your trading decisions. Firstly, the 1-minute chart is the most volatile time frame in stock trading. Let's compare the 1-minute time frame to the 5-minute chart on a hot stock that's recently in play, Tesla stock. So over here, you're on my chart here, you can see this is the 1-minute chart on the left-hand side here of the exact same day as the 5-minute chart. Now, before we dive into the specifics for intraday trading, let's just take a look at the daily time frame first. Regardless of which camp you're at, 1 minute, 5 minutes, or 15 minutes, or hourly, the daily time frame is often the most important for day traders to look at first because it gives you the overall big idea before you get so zoomed in to the smaller time frames. So the day we're looking at in particular is this day here for Tesla stock. You can see a previous lower day is around 242s and the previous higher day is around this level here at 252. So you need to at least know these two information before looking at the intraday smaller time frames. As you may have known already by now, Tesla stock went on this multi-day run after a lot of recent positive market sentiment about the improved delivery numbers and the launch of robo-taxi. So just taking a quick look at this 1-minute chart for Tesla here, you can see that this yellow part is the pre-market trading hours. You can see that the stock actually gapped down pre-market after closing at 252s. That daily level we talked about 252s the previous day, it opened up lower at 247. So that's a 5-point gap down overnight. A lot of traders, when they see this overnight gap down, they immediately start to think, oh, the stock Tesla is now bearish because of this overnight gap down and can lead to the first red day. However, it's still very important to watch the overall market condition on the SPYs, the QQQs, to see whether this gap down is actually meaningful or not. Because a lot of the gap downs, they get bought back up if the market is really strong with no negative news. So let's take a look here on the 1-minute chart. You can see stocks sold off at the open from the pre-market levels 248 all the way down to 245. Now I think within the first 30 minutes of the day, it's very easy to be bearish on the stock if you're just looking at the 1-minute chart. And why is that? You can see the two momentum indicators I use, VWAP, which is the blue line, and the 8 EMA. You can see at the open, the stock popped over both indicators and slammed back down and stayed underneath it for the first 20-25 minutes of the day. So if you're just looking at this 1-minute time frame here, it's very easy to become bearish on Tesla stock because after all, the stock stayed in a downtrend, below multiple indicators, and there's no sign of consolidation at all for a potential bounce or potential double bottom. So that's the 1-minute chart. From a quick glance at the open, the stock looks very bearish. But if you look at the 5-minute charts here, now I have a 1 minute on the left-hand side and the 5-minute chart over here. You can see the 5-minute chart paints a similar picture, but you see a lot bigger details, such as this huge V-shaped recovery over here. You can see the opening, you had to sell off, but in the grand scheme of things, this sell off from 248 down to 245 doesn't seem that bad at all on the 5-minute chart. Sure, you're below the ATMA and the VWAP indicator for 5 bars in total, but this bar that happened around the 9:55 candle, this huge green bar created a V shape recovery. That's what we call a V-shaped recovery. It's when a stock sold off a little bit but gave you a strong bounce. So let's take a look at comparing these two time frames practically now. Let's say I'm looking for an entry to buy the dip for a reversal to the upside. I'm long biased on Tesla stock. On the 1 minute charts, if I'm just trading the candles now, so if I was trying to go long on Tesla stock, trying to long for the reversal, I see a two double bottom here, that could be a signal a lot of technical traders use for reversals. But if I get in here, I'll get stopped out at the low of the day here because you can see the stock broke down this 246 low of the day first all the way down to 244 until it reclaimed it much later on, reclaiming the ATMA and get over that VWAP. Now, of course, it's clearer in hindsight that, this 940, 950 candle is the breakout above both indicators. But again, you got a lot of those false signals much earlier. Here you had a, have a VWAP and ATMA breakout, another one here multiple times on the 1 minute chart. And you just get a lot of false signals showing you that the stock could break down even further. Now let's take a look at the 5 minute charts now in comparison. Yes, at the open you spiked a little bit and you sold off below that candle, and you can see an attempt to break out above it on the 5 minute chart, but you never once had a candle that closed above the VWAP and the ATMA until all the way much later with a true confirmation candle at 955. So again, the way I trade by using these momentum indicators, I want to see candles closing above those indicator lines. And the fact that, it never closed above it, I never would have taken an entry. So that's number one. And number two, you don't see a double bottom at all on the 5 minute chart. So while for a lot of traders, they are looking for those things specifically, they may have missed it altogether on the 5 minute chart. But the 1 minute chart gave you a false signal on the double bottom. So that's why for me, I would enter on the reclaim of these two indicators. So my true entry will only be over here. After the close of this candle, I'll try to get in, risking below VWAP and the 8 EMA indicator. Obviously, I understand I'm talking about these different time frames and charts in hindsight, but I think it's very important for traders, especially if you are struggling, to kind of review your entry criteria and the charts you're using to enter the trades. Perhaps if you always get stopped out on the 1 minute chart with all the false confirmations, then 5 minute charts will give you a better confirmation on your entry. So perhaps you may not get as many entries on a 5 minute chart, but the ones you do take, you have better risk reward and a higher probability of success. So that's the first important analysis, which is the entry criteria and how they look differently on the 1 minute time frame versus the 5 minute. Now let's talk about risk and stop, or essentially like take profit as well. So let's take a look. On the 1 minute time frame, we talked about earlier, if we tried to do a double bottom entry, that wouldn't have worked at all. But on the 5 minute, you didn't have a double bottom entry at all. You only get the entry, at least the style I trade, when the stock reclaims over VWAP and over ATMA, which you did that here on the 1 minute chart, as well as on the 5 minute chart. So this is the true confirmation I look at. Now, for a lot of the momentum trading, I like to see whether the stock is riding along the 8 EMA. So if we kind of take a look at this, just the 1 minute time frame first, you can see the stock rolled the 8 EMA up from 247 all the way to 254. That's very nice. Nice little, this is like what, almost $6 per share profit. But it breaks down that EMA area around the 10 o'clock, 10:20 mark. So it breaks down that area and sold off and kind of slowly reclaimed and chopped around for many, many candles here. You can see this consolidation here until it broke out again. Now, for a lot of momentum traders using various indicators or candlestick chart patterns, you'll most likely get stopped out around the 252s area. Over here, when the stock once again broke down that ATMA, as well as breaking below that daily level we talked about. Remember the 252's previous day's higher day? That's the daily resistance. And it's not bad. You still made a decent profit from all the way from 247 to 242. That's not bad. But you will get stopped out nonetheless around here. Like, I don't think a lot of traders using the 1 minute chart will be able to sit through all this kind of choppy action from 10:15 all the way to 10:58, almost 11. But now, if you take a look at the 5 minute chart over here, you can see earlier I talked about how I use the ATMA. I'll try to ride it over the ATMA breakout on 248 all the way to 244.54. You can see the pullback all the way down to ATMA once again, but it never once closed below that ATMA. Even though, yes, you're below that daily key level 252, you never once closed below this orange line. And that's the momentum indicator I use on the 5 minute chart because it allows me to be more patient and gives me more time to sit through all the pullbacks you see here. So you can see pull back to the ATMA indicator, bounce again, pull back to the orange line once again, and broke out above the daily key level, 252s, and then went higher after the breakout once again to 259. And overall, just on the 5 minute chart, I think it allows traders to be more patient and let the winners run. So, even if you have taken some partial profit around 252s, if you have a good average, it's fine to sit through the pullback and see if the stock does break out through that daily key level here, 252, and head up higher. Basically, the higher time frame, like this one on the 5 minute chart, at least for me, I will be able to sit through this kind of consolidation to the upside. Whereas if I'm looking at the exact same time period on the 1 minute chart, I don't know if I can sit through this kind of consolidation action. So that's the reason it'll be a good idea, even if you want to stick with the 1 minute chart, to switch back and forth between the 1 minute and the 5 minute time frame to allow you to ride the winners longer and maximize your profits. So let's just take a look at one more example here on this particular day. You can see the previous higher day, once again, the daily key level is around this 259 area. Now let's take a look at the intraday chart. Here's another example over here once again. This 259 area is another daily resistance level on the daily charts for Tesla stock. You can see on this particular day, this is the next day after our previous example, the stock was testing that previous higher day, that daily resistance multiple times here. You can see it tested once, failed, broke out, failed, sold off, retested again, failed, again, failed, and once again choppy until it finally broke above at around 12 o'clock. So it took about 3 hours to break above it. So after seeing 5 attempts that broke out and kind of failed, it's very difficult for most traders to sit through that and want to continue sitting through that range and chop when it looks like the stock is failing that resistance. However, if you look on the 5 minute chart, it's so much cleaner. Once again, you can see here that choppy area we talked about all the way from 11 o'clock to 12 o'clock. That's a matter of only about 10 candles here. Over here, you can see, yes, it did retest multiple times, but you can see higher lows on the 5 minute chart. No higher highs. You can see the resistance here, but you see higher lows. It's still uptrending. And again, it's still riding along that 8 EMA. So if you are looking at the 5 minute chart, it will give you a lot more confidence and more patience to stay in the trade and sit through that consolidation. So that was the first key concept I want to share with you guys today. How I use the higher time frame, the 5 minute time frame, to improve my trading executions and maximize my profits. I almost never use the 1 minute time frame anymore. And I still remember that many of you commented under this particular video here requesting for more trading tips regarding timeframes. So I really appreciate your support and feedback. And so I would like to share with you another key takeaway. Key takeaway number 2 about my 5 minute time frame trading. How to use the higher time frame chart to avoid a bad and choppy market and avoid losing money. If you're enjoying the video so far, please remember to smash the like button down below if you appreciate all the tips I'm sharing so far. Okay, the second key concept that you should know is how to use the 5-minute higher time frame to help you avoid unclear setups or chart patterns that are just not confirmed yet. And we're going to be comparing that side by side with a 1-minute time frame, which can lead to more failed confirmations and over trading. In stock trading, prices are always the most volatile during the morning hours from the open to about 11:30 a.m. Well, this is the golden time frame for most momentum traders to spot their setups and nail a decent trade. There could also be a lot of choppy days, even from the open, when the market is very indecisive. When you see this kind of chart and price action, as traders, you need to be able to identify what the chart looks like and avoid the sideways trading action, because neither long or short bias traders would have any decent risk reward or any momentum and volume to capture. So on the chart over here, you're looking at Nvidia stock, the 1-minute chart on the left-hand side and the 5-minute chart. Now, I think for this one, we can agree that whether it's a 1-minute or 5-minute, it looks like a mess, right? You can see the stock sold off, bounced around, went back to higher day, but ultimately sold off once again at the end of the day. And the daily chart we're looking at in particular looks like this. This red candle here is the daily chart we're looking at. You can see previous day we had a strong candle breaking above the daily EMA. And the second day, we just had like a range trading day and a small pullback. So just looking at the 1-minute charts here, you can see a clear pre-market rejection, $128 level. That's rejected twice, double top at the open. You sold off to 126, which I get it, it's like $2 per share range. But for Nvidia, that's extremely limited for a stock that's trading at $120. So you get a $2 range and then you bounce. It's just not a lot of, I guess, clear chart pattern that shows a potential direction of the stock. So for momentum traders, if we see a stock rejects the previous higher day, which is the 128, the previous pre-market key level area, then you would think the stock has more downside. But no, it held at 126 level 1, 2, 3 times. But the bounce, you barely get a $1 per share bounce. You can see from 126.26 to 127.30. So you get like a dollar per share. But once again, for Nvidia, that's extremely limited. I think the only person who can potentially make money from this are scalpers who are scalping for 20 cents, 50 cents. But for a stock like Nvidia, just trying to make $1 per share or less, it's just not efficient. So once again, comparing side by side the 1-minute chart and the 5-minute chart. You see 1-minute chart, you failed VWAP multiple times. Once, twice, 3 times, 4, 5, 6 times before you finally have a clear breakout. But if you were attempting to try to long that VWAP breakout every single time as a scalper, you would have gotten destroyed after attempt number 3. Whereas on the 5-minute chart, even though yes, you still get a lot of failed VWAP breakouts here, here, and here, at least it's not as frequent, and you see the overall bigger picture on the 5-minute chart a lot more. But anyways, the message here is that by using a 5-minute time frame, it allows you to see the bigger picture. So when a stock is indeed choppy like this, you can identify at least the top range and the bottom range relatively quickly, and don't get fooled by intraday confirmations such as double bottom, triple bottom, and a lot of these failed VWAP breakouts. So just overall, on the 5-minute charts, you see cleaner action and clearer confirmation. So this kind of price action signals and confirmations on the indicators and candlesticks would help traders to avoid getting chopped up by these kind of choppy range and choppy charts. After almost 10 years of trading, I've seen enough in various intraday timeframes to know that the 5-minute chart would be the best time frame to help me avoid unnecessary trading or over trading on days where I should not be aggressive. So now that you've learned the 2 crucial concepts about the benefits of using the 5-minute time frame in day trading, let's dive into some live trading action. And hopefully you'll learn some realistic insights from watching my live entry and exit executions on the 5-minute timeframes. And as a reminder, if you're enjoying this particular time frame video so far and you're learning a lot about the 5-minute chart, just put the number 5 in the comment section below. I appreciate it. So market's not open. You're looking at the stock I'm about to trade, which is ZAPP, ZAP. This stock has been going parabolic on the daily chart. I've been waiting for a first red day to short the stock. You can see I'm executing the first order starter size at 2-minute charts here on the top and at 5-minute charts at the bottom. Again, I like to look at both time frames to look at confirmations and how to stay in the trade longer. Using a 5-minute chart as a confirmation, I can see the stock is remaining very weak. Despite SSR being on, the stock cannot bounce at all. So you can see I'm in now at around 500 shares short with an average of $12. So on both the 2-minute charts, you can see a lot of volume traded on the selling side, and that's matching the 5-minute chart price action. So you can see I'm looking to add, the stock is remaining weak, testing 1140, 1130s already. Again, I'm not just looking at 2-minute chart, I'm also looking at the 5-minute, whether we have more downside for the stock to go. Again, I'm shorting the stock, so I'm essentially wanting the stock to go lower where I can cover for profit. You can see on the 2-minute chart here, on the top here, the stock is bouncing from $11.40 to $12. So you can see over here, I didn't stop out with that 2-minute bounce candle here. A lot of people would have panicked and stopped out, but on the 5-minute chart, it still looks fine. You can see on the 5-minute chart, you see a bounce, a green candle, yes. But again, the volume is so much weaker. You can see that green candle, the volume is a lot lower than the red candle previously. So that to me says there's a lot more volume on the selling side when the stock is breaking down than on the buying side when the stock bounced. So that's why I use the 5-minute chart to help me stay in the trade longer. So fast forward a little bit now, you can see I'm only using the 5-minute chart on ZAP at the bottom here. The stock, even though you can see some attempt to bounce, it always stayed below that VWAP area as well as below the ATMA. So you can see I'm actually looking to add on the short side. I add on the short side, but once again, that's after I observe the price action on the 5-minute candle here. You can see that's the reason I'm switching between 5-minute and 2-minute charts a lot. On the 5-minute, I see a bear flag, the stock consolidating for a more breakdown, for even more breakdown. So you can see even on the 5-minute chart is really choppy, but it's still holding the trend to the downside. So I fast forward a little bit here, you can see the stock is on the 5-minute is still very weak, still below or around that $12 range, but it's never able to reclaim the upside or create higher highs and higher lows. So once again, I'm staying in it during this bearish consolidation. Finally, we're slowly getting a 5-minute chart breakdown here. You can see what the 1-minute chart looks like on the top here, right? Like very choppy. It'll be very difficult for me to sit through this 1-minute chart on the top. I mean, the 5-minute is difficult enough, but on the 5-minute chart, again, you see the bigger picture. You see the volume decreasing at the bottom, as well as the stock downtrending, creating lower lows, lower highs, and now you're testing the lower day at 1136. And right now I have around 1,900 shares with an average of 1170. I'm looking for around $10 on the stock. So this is a perfect example of how using the 5-minute time frame versus the 1-minute or the 2-minute will help you stay in the trade longer. So over here you can see we're testing $11 lower day. I haven't covered yet. I think I might cover a little bit soon, just to lock in some partial profits. So you can see I locked in about 900 shares at 1082. So fast forward a little bit now, you can see this is what the 1-minute chart looks like on the top. Look at all this mess. There's no way I can sit through that on the 1-minute time frame. But you can see on the 5-minute, I just covered near lows at 1022. I just have 500 shares left, trying to let it ride to like $10 or something like that. But this is how you can use the 5-minute chart to maximize the profit instead of using the 1-minute chart on the top here. Like, what a mess. Like, there's no way I can sit through that. So you can see at the end of the trade, I did cover just everything about at 12 o'clock when it started bouncing. But you can see I definitely left some money on the table. As the stock later tanked to $10, closed at around $8.90 at the end of the day, and now it's trading at 8.30s after hours trading. But again, once again, this is the 5-minute chart on the top. Looks so much cleaner, right? This is a 5-minute chart. Let me just zoom out. This 5-minute chart I got in here during the bearish consolidation, held it, broke down, so bought it back, covered around the 1030s. Versus the 1-minute chart. This is what the 1-minute chart would look like. Like, I don't know if that many people can sit through all of this. Maybe you can, but there's no way I could have. I would have just covered everything up here at $11 if that was the case. Hopefully you enjoyed this educational video on using trading timeframes to maximize your profit. If you want to learn even more about different timeframes in trading and how to maximize them, you can check out this video over here. And don't forget to check out my scanner, Stocks.io, link down below. That's a scanner I use every single day to find stocks to trade, including my built-in strategy template, how to borrow stock features, short interest, and so much more.